All right, good morning, everyone. Let's get going. All right, last night, obviously, no session in the U.S. last night as we had Labor Day to close the summer holidays. Pretty much hoping that that's the end of the exceptionally low volumes on global equity markets. And maybe we'll see a bit of a pickup, especially maybe toward the end of the week after some of the big fund managers get in here and start digesting things and can start making some decisions. So we'll see what happens today. Hopefully some big pickup today. In Asia, bit of a mixed action. We had Nikkei really outperforming up over 1% on the day. That was namely because of the weakness in the Japanese yen, weakening all the way back out to almost 105, which I think is really, really big for them. You know, that's an export-driven economy, obviously, and it's a very big positive for them as they see weakness in the yen. And this is exactly what they've wanted and one of the things that the central bank's been aiming for. So you see there the exporters really driving things there. Other than that, I mean, not a whole lot of significant action. You know, we saw China having a reasonable balance, maybe on the back of Huanghai Energy, but you know, there's nothing really to give us any leadership out of Shanghai. So I think it's going to be a wait and see. You know, we've had a couple closes in a row over 2,000 on the S&P. It's going to be a wait and see. You know, how the market, you know, can digest all of these things, digest the long weekend, see if we can continue to push higher, see if there's any more issues out of Russia and Ukraine, which has also been really dominating headlines. So interesting little chart here. For our charts of interest, should be interesting. You can see that we're really pushing back down to historically low levels on the jobless claims numbers. And I think what's interesting here is that you know, if you look around at the low points on this in this chart, this has really been a well-timed predecessor about a year or so before we started to hit the peaks in equity markets. So that I think is something that is probably not a coincidence, and something that is worth noting. You know, we've seen a lot of those kind of charts starting to set up. So I think that obviously we know we're in the later stages of probably a bull market run, but you know, obviously the end of that run can be vicious to the upside. It doesn't mean that we couldn't have significant movement back the other way. So we'll keep an eye on these type of indicators and keep bringing them your way as we find them. All right, this morning we had yesterday we had a trading update out of full year trading update out of Steinhoff. You can see the guidance a little bit softer there. I'm going to read you a little bit of a report here real quick. Sorry, that's the wrong thing. No, I closed it down. Sorry about that, guys. All right, it's back. Okay. So one of the things that they talked about from one of the banks that we got something from, saying that the headline earnings per share growth was below expectations. And the miss was attributable by marked underperformance by JD Group. Obviously, the JD Group's numbers were very, very soft. Big loss of 550 and to 570, something like that. So big negatives there. When you take that out, the numbers don't look all that bad, but I think nonetheless could definitely potentially put some profit. Or could definitely put a little bit of pressure on Steinhoff this morning. If we look at market data out today, a little bit lighter today. We've got Japanese monetary base, which is a little bit soft. We have UK construction PMI. We've got European PPI. We've got PMI in the States, and we've got ISM manufacturing in the States. All right, let's get into the maps. To be totally honest, because the States is closed last night and there was so little on the go yesterday, I've got very little to show you. I was really digging hard, just trying to find anything of interest, anything that had really significantly changed. One of those things that had changed as of this morning, you can see there the gap up here in the US dollar yen. You know, we talked about this one not that long ago, and we talked about the breakout out of this this little narrowing wedge or descending triangle, whatever you want to call it. We've made the breakout now. We talked about we're probably going to come up and at least test the highs, if not go higher. Recent highs are very near in sight here at 105.40, and this is a bullish thing. It's a bullish. The yen weakening is bullish because it's the carry trade. I know against the dollar it's not really much of a carry trade, but it's definitely a bullish thing in equity markets. So so long as this continues to weaken out, equity markets will probably be relatively solid as this happens. All right, if we look at Telkom, I actually wanted to show you can see there on the 1 year it's pretty evident as well. I'll shorten this up just to give a better idea. This thing kind of keeps making the same sort of pattern where we pull back off of these big bounces higher, only to kind of basically flag out, and once we push up through these flags, we usually get a nice run. We flag back out. This one looks a little bit different because it didn't flatten up the line as much as this one, but very similar type patterns, and same sort of thing here, probably looking to come up and rip through to make new highs. The rest of these things are kind of maybe doubling the height of the channel, so this thing could take us up to as high as maybe 61 on a move higher here out of Telkom over the next few weeks. So just keep that in mind, or next week or so, because the pattern's just been so consistent. As trends go, it's nice to follow those so long as they're still working. All right, let's look at the JSE. We're really digging deep here, using the help of our resident chartist to throw out some ideas for us here. The JSE, so you may have seen this one on Twitter as of this morning. But you can see here, JSE's been consolidating between 96 and 102, about a 6 rand little range there that we popped up above yesterday on a closing basis. Obviously, the target here would be quite simple at about 110. So just watch this one. I think it's built up. It's spent a lot of time there. You can see here after we broke out of this consolidation, incredible how this thing just defines itself on the same sort of level for such a period of time. And then once it breaks up through, it really goes. I think the same sort of thing could be happening here. 110 could be on the cards very soon. It's easy to make money when you have a monopoly. And then if you look at Steinhoff's, the last one I'm going to show here, this could end up looking like a bit of a bear flag this morning if we see a move back below 52. That happens, which I would assume that it would. I wouldn't be surprised to see us obviously take out the lows. When we take out the lows, and if probably the first level of horizontal support maybe down around 47, I don't know, somewhere along those lines. Not saying it's going to get there, but it's going to be interesting to see this morning. That's it for today, guys. Thanks a lot.